And elsewhere, as the window for public participation in the budget-making process draws to a close, a section of stakeholders are proposing a raft of measures which could translate into a higher tax burden. Speaking during the pre-budget hearings organized by the Institute of Economic Affairs in Nairobi, the International Institute for Legal Affairs is proposing the reintroduction of a uniform specific tax rate for all cigarettes, which will be increased by 15% from the present 3,100 shillings per kilogram. Further, it is proposing on an increase of the tax rate on alcoholic drinks by 15%, while that on sweetened beverages by 10%. Proposals on debt partaking and repayment have also been tabled before the National Treasury.
Kenya's economy will expand by 5.8% this year, 0.4 percentage points lower than the Central Bank of Kenya's projection. For an economy that is operating below its potential, it will take much more in terms of execution of policies besides lending rate cuts to stimulate the economy to higher productivity.
We know that.
Apologies for that mix-up. The government has been challenged to go a step further to provide incentives for banks to lend to specific sectors aligned to the Big Four agenda. This comes in the wake of the cut of the central bank rate to 8.25% 2 days ago. Alex Mwangi with the details.
Standard Chartered Bank projects that Kenya's economy will expand by 5.8% this year, 0.4 percentage points lower than the Central Bank of Kenya's projection. For an economy that is operating below its potential, it will take much more in terms of execution of policies besides lending rate cuts to stimulate the economy to higher productivity.
We know that there are economies such as Nigeria which look at lending, sector-specific lending. So those are some of the low-hanging fruits where banks could be incentivized to lend to specific sectors so that they can be able to support this Big Four agenda.
With a 25 basis points cut of the CBR to 8.25%, the Central Bank of Kenya has clearly shown its intention to boost economic growth by promoting lending to the private sector. Financial and economic analysts at Stanchart, however, believe there is a further rate cut in the offing.
We would expect to see more monetary policy easing, particularly in March, where we're expecting to see a 25 basis point cut in the policy rate to 8% from the current 8.25%. And this is as monetary policy starts to do some lifting of the economy or stimulating the economic growth.
The desert locusts ravaging various parts of the country, if not dealt with effectively, could undermine the productivity of the agricultural sector, which is the single largest contributor to the GDP.
We would expect to see a higher inflation profile this 2020 because of that particular invasion, and possibly that may provide some risks to our policy rate outlook.
According to Standard Chartered, Kenya's neighbor to the west, Uganda, and to the south, Tanzania, are both expected to have GDP growth exceeding 6% in 2020.
So our expectation for 2020...
Alex Mwangi,